FOREX.com. Thanks again for joining us, and we wish you a great rest of your week. Ladies and gentlemen, our staff at Traders Corner sifts through hundreds of pro traders and brings you the most credible and qualified traders to participate on our shows. Up next is one of the most respected technical analysts and traders of the industry with a high reputation for accuracy in both bull and bear markets. She began her trading career as an equity swing trader in the mid-1990s and has since expanded into many other sectors of the market. Her style of trading and market analysis transcends both time as well as market vehicles, making it attractive to investors and traders of stocks, futures, options, ETFs, commodities, and foreign exchange. Here to present simple steps to trading is Toni Hansen. Welcome back to Traders Corner, Toni.
Thank you so much. Does
You
everyone
are
hear me okay?
you are very welcome. Audio checks good, and I had your presentation up. There it goes.
Oh, wonderful. All right. Well, thanks again for having me, you guys. I want to basically cover some of the steps that I realized over the years were necessary to be a successful trader. And taking this basically from a mindset perspective, as well as showing you some of the ways that I analyze the market. So Melissa showed you some really great information there with the gaps, and that was one of the first types of trading that I did back in the 1990s. I love gap trading. These days I've moved across the country, so I'm not as good at getting up in the morning to do all of that pre-market stuff, but it is a wonderful way to make money in the markets. And the wonderful thing is that you do get to only spend, the first couple of hours if you want to. You don't have to be there all day. So some of the things that I'm going to share with you today as we proceed are going to be the ways that I look at technical analysis and how we can overcome some of those hurdles to really trade confidently. And that is a big issue for many traders. Where do we get the confidence to trade? And how can we do it consistently? Especially if we end up with a period of time where we're really struggling and we have these mental blocks that become very difficult to overcome. So, the old adage, it takes money to make money. And that is one of the most difficult things for a lot of traders. They're coming in with a lot of individual traders. They're not coming in with $100,000 in a trading account for most of you. And that means you need to have a very solid system that you have tested over and over and over again until you really have confidence in that system. Think of it like riding a bike. When you're first getting on a bike, you're wobbly, you're kind of all over the place. And as you get into anything that's even more advanced, your confidence level takes time to build. If you are a doctor that is, going into emergency medicine, you're going to have many, many types of situations thrown at you. If you have a specialty like cardiology, which would be, for example, like gap trading, if you're going to specialize, then it's going to take a time to get to a level of where you have that confidence in your specialty. I'm a little bit more like an ER doctor that's had a lot of specializations over the years, where I started out, focusing on things like swing trading and gap trading. And I've tested out and traded a lot of different markets. The market that I predominantly trade these days are futures, and that's simply because I can come in and trade anytime that I want to and anytime that I have free. And I'm not tied to a particular time of the day. I'm not tied to as much prep work, but that doesn't mean I can just slack off and not do any sort of prep work. And this is where that confidence level comes into play, and really trading with confidence and learning how to trade with confidence. So we have a couple of key requirements for successful trading, which means confident trading. And the first one is having that solid trading strategy. So if you're going in as a gap trader, you want to have a gap trading strategy that you have tested over and over and over again and back tested. and you have done it consistently. And this is, of course, where things like sim trading come into play. We didn't have sim trading when I started off. We had paper trading, which really is like a step lower emotionally than sim trading. Sim trading, at least you actually have to click a button and do something, right? But you need to have that level of where you're actually doing that action and putting it yourself out there and putting those orders on the books so that you can see and learn how to move them and how do we adjust them as they're unfolding and what do we use for target levels and how do we change our target levels if the market is not following through the way it should be. The second thing that we need is the discipline to trade your strategy according to the rules of that strategy. So I do a lot of trading where I'm doing reversal strategies. I'm looking at markets where they're coming into the very beginning of those stronger trend moves, those stronger corrective type of moves where we can get the really nice impulse action, that really rapid movement that a lot of the gap trades can do. But you need to understand, hey, is this where I need to place my stop? Do I need to adjust my stop? Where should I take my targets? When can I let my targets run further? And these are things that having a strong trading strategy and a solid trading strategy that you trust in, this is where this comes into play. But the discipline to trade your strategy according to the rules, that starts to get more difficult because the longer you trade, the larger your rule list is going to become. You're going to come in with a simple, the cat walked up the hill, and you're going to end up basically with very complex sentences in the market. And that is where an understanding of a true understanding of price action in the market comes from. You know, having the discipline to recognize when things are changing and the rules that you can make those adjustments as they are changing and not just say, hey, this is going to go to this target level or else I'm just going to take a full stop. I've never accepted the concept that I've seen a lot of people put out, well, my trading strategy is 80% successful and 20% of the time you're going to have a stop. You're going to stop out and that's just the way it is. There's always a reason for a stop. There's always things that are going to increase your risk that a stop is going to happen. And knowing what those are going into a trade, that's going to help you with your confidence level. Because if you know that, hey, this particular trade, it checks off a lot of these boxes enough that most of the time it works, but there's a couple of cons here. And understanding that, hey, when these cons are here, it's more likely to stop out. Well, what can you do as far as trade management goes in situations like that? And there are a lot of ways that you can expand upon very basic core strategies and continue to learn them for years and specialize in them. And the wonderful thing with sticking to one solid strategy to begin with is that you're going to start to learn all of the other ways that the market moves and unfolds just by focusing upon a single strategy. And I'll show you guys some examples here as we go forward, of course. You also need to have the ability to avoid emotional trading, which of course goes back to the discipline, but it's not always that easy, right? Especially if you start your day out with a losing trade or you mess up and you're not following through with your discipline. And yeah, that can lead to a lot of problems. So what does drive emotional trading? Well, a lack of knowledge and experience is the big thing. So when we're looking at developing strategies and learning trading strategies, really we're just taking a scientific method. We're looking at an observation or a question and a research a topic area. So if you want to trade morning gaps, for example, right? Well, what we would want to do would be what would be a core strategy that we would want to focus on coming out of that gap. What is one particular type of gap? What is one particular strategy for that gap? And then we make a hypothesis. We say, hey, this is where I think that my target level is going to go. This is where I think that this stop level should be placed. These are the things that I think are pros for the strategy. These are the things that I think are cons. And then you test it with your sim trading. You analyze your data. This is the step that most traders skip. How many of you are actually doing a trading journal where you're taking a snapshot of every single one of your trades and you're making notes on that trade, pros and cons? How many of you are doing that? Nobody is speaking up. It's not an easy thing to do, right? It's like telling a kid, hey, you need to go home and you need to do your homework after they've spent all day at school. Who wants to do that? You want to go out and go on a bike ride or go swimming or watch a movie. You don't want to be stuck, hey, doing more work after, especially if you've had a hard day in the market. It's not a fun thing to always do, but you know what? It's probably the best thing that you can do as a trader. And if you want to be successful in trading long term, you can't skip that analysis portion. You have to start to recognize patterns in your own behavior that lead to successful trades, as well as those patterns that are leading to not so successful trades. And you have to understand patterns in the market that you are trading better than others so that you can focus on that and develop that skill and expand on that skill. And in the meantime, you can learn some of the other stuff along the way, but it's going to take a back seat. You want to put your focus on the type of trades and the time of day and the type of market that your data is telling you that you've had the best luck with, that you seem to have a little bit of a firmer grasp on. And then, of course, you've got, report your conclusions, which is just the culmination of all your data, and you go forward. You just continuously repeat this cycle as long as you're a trader, basically. So I've been trading for, oh gosh, 1996. So yeah, it's been a while and I'm still in this cycle. It's not something that you're ever going to stop. One of the things that drives emotional trading, of course, is the fear of missing out. Right? So if you miss a lovely breakout like this here on the Euro Swiss, which actually looks very similar to our breakdown in the Nasdaq this morning, you might think, oh, you know what? Well, here's another little base. I've totally missed this, but it's basing at highs again. So it looks like I could get another continuation. And you'll take that later setup and you might have it just as like a tiny scalp or something like that, or you get stuck in like a gap like this, and it really can lead to these massive situations where it becomes harder to make things back. You also have the overwhelming desire to recuperate losses. That can be another thing. So this is a screenshot I had one of my traders send me where they were struggling. And what you'll notice is that it's just an emotional roller coaster. It started out with a short trade where basically they were just too late, took a stop on it, shorted again almost right where they took the stop because, hey, that's a level of resistance and they're thinking, oh, you know what? I was right. It's a nice two-way move on the upside. I can still go down again. But when it proves itself that it's not working, they didn't go and trade it properly. They added into the position. So they basically just went into scalp mode, ignored what should have been a stop level, and never really held anything even when it did try to work out. So this led to entering at, really bad places, taking bad stops. And then when things finally are, turning around and they're starting to have that placement where they are correct, not holding for it because they're trying to overcome all of those earlier losses that make it much more difficult. So, one of the things we can obviously do is limit how much we trade during a day, and that can help us. But having that system in place to begin with, that's very, very important. And of course, greed. So we all know the story of the Midas touch, right? Well, consequences of emotional trading. If you're looking at wanting everything to turn to gold and you get too aggressive, things can really backfire on you. So make sure that you have the specific rules for taking a trade and how to execute it as it unfolds. And here's a big question. Can you explain the strategy that you want to trade clearly to another trader? Can you teach it to somebody else? So when I first started trading, we didn't have things like blogs and that sort of stuff. I had a website, swingtrader.net, and I started posting just the trades that I was taking and what my analysis was. And we had things like Elite Trader as like a message board, but not quite the same thing as what a lot of traders are doing today. And I just started posting what I was doing and why I was doing it. And it got attention from people and they wanted to know, hey, can you come and teach my traders? I'm like, well, okay, I'm still learning, but you know what? My mom was a teacher. My dad worked for the university. And so I grew up with this mindset where it doesn't matter how much you know because you can always work with somebody that knows less. And just explaining it to them is going to help you learn further. It's going to bring up questions that you might not have thought to ask yourself. It's going to trigger these thought processes where it opens up your mind. You don't get stuck into this mentality, well, this is what it is. It has to be like this. It can't change. This is the system as I was taught it or as I read it. And I didn't start trading with much of a system. I mean, basic technical analysis back then was kind of viewed as a little bit of voodoo. A lot of emphasis was placed on news and all of those metrics going in with the financial solidity of companies and things like that. And um, I knew as being trained as an artist and anthropologist that traders repeat or people repeat actions. We are very cyclical creatures and not much has really changed over the millennia. We repeat the same patterns of behavior. We react to same things the same way, that greed and fear mentality or our adrenaline. Um, it all comes out the same and you can chart that. And that's what charts of the market are. And, when COVID was first hitting, some of the things that we did was we would chart COVID rate infections because, hey, they looked exactly like stock charts because you're just measuring human behavior. And that's how viruses spread based upon human behavior. And the same thing in the markets. We can look at levels where markets are bottoming out. People are starting to feel safer and more confident going out in the world, putting their money out there in the world, and that can lead to things shooting up, whether it's stock prices, COVID infections, whatnot. And when we are getting back to overcoming our emotions and things like that, we want to understand where these patterns are coming from. we don't have to dive deep into the psyche of a trader. We just have to understand that, hey, these charts, these are showing us the emotions of this particular security. And if we want to trade a particular strategy, can we clearly explain that strategy to another trader? And the more details you get into, the more you can go into like advanced, well, this is what it should do, but if it does this, then do this. That shows you advancing as a trader. But start with the basics. I always start with like a core template when I'm teaching a new strategy and expand out from that template once traders grasp the basics. How many of you have English as a second language? Anyone? Or third language or fourth? Well, anyone that is learning a new language knows that there's always more intricacies that come involved than what you learn when you are first learning, when you're first, starting out, when you're first starting with just generic conversations. And that's what a core template starts like. That's what any system of trading starts out as. It doesn't matter if you're trading a gap system, if you're trading a reversal pattern, if you're trading continuation patterns, you're all starting out the same. You're starting out with the basics of a new language. And the longer you stick to that particular strategy, the better you're going to become at that language. You're going to start to learn all of the variances, whether it's a language like English where phonetically it's a mess, or if it's something like Turkish where they basically just scrapped the way it was written back in the 1920s and started over with the phonetic alphabet. And so you have a better chance of at least spelling things correctly or sounding them out correctly in a language like that. And trading is probably a mix of the two. We start with our basic strategies, but we can definitely go into a lot more intricate details. So how well can you explain that strategy? It's very, very important. Another thing that you can do to overcome emotional trading is to use a bracket order or an ATM order. And that means that, hey, if OCO orders is another way, one cancels all, one cancels other. Those are other type of orders that you can use where when you're placing your order to get into the trade, it's immediately throwing up target levels and stop levels. And then you can adjust those if you need to. A lot of traders will have like standard ones that they can choose from. So, for example, this isn't my core trading computer, but I can show you what I mean by that here. Let me grab my mouse. So we can go over into something like this where in your drop down here, you can have like different strategies that you can trade. So this can be based upon like the number of contracts you would trade. And you can go and have things that are set for standard levels that you might look at. So if I went and put something on here, for example, as let's say we're hoping this is a two-wave correction for a continuation. This is a horrible spot to enter a new trade, but let's just say we're going to anyways here. And if we went and we put that on there, oops, it's not going to do it on. Well, hold on a second. Let me put up a different market. Like I said, not my trading computer. So show it to you on, got our MES here. So if we went and we said 3 and we did a buy at the ask, for example, what you can see is that it can throw up those levels up here. And then we can go and make adjustments based upon where we think something is going to hold. This is not a great level on the ES to put on a trade either, but it gives you a good example of what that ATM order can do for you. And that can help start to take some of the emotional action out of the market. So you can focus purely upon the technical levels that are happening and where you should place your stops. So using those bracket orders, that's a great way to get some of that emotion out. Trade a strategy long enough in a sim account that you're confident in your executions, and journal each and every trade no matter what. So the old adage where doing a little is better than nothing is what comes into play here. Doing a little bit of analysis of the trades you took is better than doing no analysis. So if the least you are doing is taking a screenshot on preferably multiple time frames, because that can often be the key to your advanced analysis and management on a trade, and have your entries and exits marked. Don't have a ton of indicators that are going to make it difficult to look at your price action. Those are just basic steps. And then when you find time on the weekends, you can go back and you can look over all of your trades and you can say, hey, you know what? These all have similarities. These were winning trades and they all worked out. They have similarities. These were losing examples. Here's some of the similarities with those. And you can always go and expand upon what you've journaled, but it always starts with the very basic thing of knowing where you started from. What did you have as the reason for taking the trade in the first place? And you might find that, you know what, you're taking a lot of trades that really you didn't have a good reason to take, period. And that can start to make you hesitate when you take a position. It makes you think about, hey, you know what, is this really going with what my strategy is, or is this an emotional trade? Is it a FOMO trade? Is it a revenge trade? And just that hesitation by seeing over and over again that you're making a similar mistake over and over again, just eliminating the mistake half of the time is a huge step. Organize your journal by strategy, you guys. So when you do sit down and have the time to go back, look at examples of the perfectly executed trades. What did you do well? The ones that fit that strategy that were winning trades. What about the ones that fit the strategy that were losing trades? What about ones that fit the strategy, but they have a little bit of difference in terms of how they played out? Those are things where you can always go in and you can go into more detail. But if you're trading one strategy throughout the day, you probably only have a couple of trades that you're taking during the day. So there's no excuse to at least do a screenshot and throw it into some basic organization. I print out everything. So if I'm wanting to go back and look at something, I can actually spread things out more easily than I can if I'm just putting it up on my screens. It doesn't matter how many screens you have, it can still be a little bit more difficult. And of course, that just depends on your personality too, you know, what works best for you. But analyze your trade every time you close a position. So make sure that it is something that is going into your trading journal. And I always take my screenshot a while after it's closed, my final screenshot, because I want to know how it followed through. Is this something where if I had done different management that I could have held it for more gains? Could it have be a gap, for example, that would have gone on as a multi-day swing trade? So that's something I want to know. I want to know, hey, what's the longer term? And is there a strategy that could come into play for holding it for those bigger gains? Another thing that we need to do is to keep our risk to a bare minimum when executing live trades. So if you're trading something like futures, this can mean going in and trading the micros to begin with. You'll saw on the charts that I had up here, this is my teaching computer, and I have micros up there. And that is what I recommend all futures traders start with. Thankfully, we've got micros in oil now as of the last year. So that's awesome too. You can do micros in gold, you can do micros in oil, you can do micros in the indices. We didn't have this when I first started trading futures. So you always had, you know, some pretty big swings in there. But now you can keep your risk really minimum. And I always recommend, though, if you're trading futures, to have 3 contracts, because you need those to be able to work on your management techniques. So it might take a while with sim trading to build up the confidence to be trading with 3 to 4 contracts on even the micros, because hey, a winning trade that could be a good $300, $400, and your losing trade might be 100 and 120. That's just a basic setup where you're not necessarily looking for a full trend move or a full trend reversal. But try to keep the trades to comparable stops too. So this might mean that, hey, if the market's moving really fast, you're not trading because you can't do your executions and analysis fast enough to keep your risk to a comparable amount as you would have seen on another trading day. One of the things that is sort of controversial in trading is looking at your profit and loss. You'll see lots of traders that are always posting what their profit and loss is over and over and over again. I don't like to do that, and I highly recommend against it, because it is not where your focus should be. Your focus should be on the strategy and whether you're trading the strategy correctly. And if you take in your contract size or your share size properly, you're going to know what your risk is. And if you are focusing upon your profit or your loss, you're not really focusing upon the technique of the trade. And that's where a lot of emotional trading really comes into play. So I like to not have my profit and loss up at all. In fact, I don't even think my charts on here will show that to you. So if I do a sim trade, for example, what you'll see is that in this little black box there, that's where it would normally show your profit or your loss. And you would see it over here as well. If you trade on NinjaTrader or something, you have to go into properties to change that to P&L display unit, to change it to none. If you just toggle between it, it's just going to go from currency, percent, pips, points, ticks. But if you actually go into properties, you can change that to none. So that way you don't have to look on that, and you can focus on what's going on with the actual strategy. And on my trading computer, in fact, the way I have this set up is that I have the screen on here like this, but if you go into like the orders here, and I wish I could put this all the way over, I can only put it 75%, but I make these so that I don't really see them very well on the chart. So you can make your lines very light so that your focus isn't upon what those price points are, but you can see what's really going on with the chart itself. And that can really help out there. So that's one of the things that I do as well. Build your positions slowly. Drop off if you are not following your rules. So if you're not holding your positions to target points, or you begin to take more losses in a row than you did when sim trading, you need to go back to sim trading. So trading is always like, I say it's sometimes like 3 steps forward, 4 steps back, 5 steps forward, 3 steps back. It's not a consistent path that you're going to be taking. But the faster you can drop back and say, you know what, I'm not following my rules. I need to get back to following my rules, and to make it a habit to following those rules, that is crucial. So some brokers will allow you to set loss limits and size limits. Ideally, every broker under the sun should allow you to do that. If they don't, call up your broker and ask them for that. The more people you can get asking, the more likely they are to actually initiate it. It's just stupid that they don't, because you're going to stay in the game longer and ultimately give them more commissions if they're setting your limits, right? So anyways, to me, this just seems ridiculous that it's not an obvious choice that we can do with our brokers. You can do that if you're trading through like a shop. They'll set limits for you, but doing it yourself, it's frustrating that they don't offer that. But you can limit the number of trades you allow yourself in a trading day. You can limit the loss you allow yourself in a trading day. It's just harder because you're basically relying on yourself to overcome your emotional self, which is not always the easiest. I use NinjaTrader as a broker. They do not have that option, unfortunately, or at least they do not yet. So you can also set a limit, like say, hey, you know what? I'm going to allow myself so many trades, and then I'm going to take a break to study. I'll take a break to go back and look at my journals and just step out, get away from the market for a little bit. And that can always help refocus as well. Also, limit your trading to the hours where you're sim trading has proven to have the greatest returns, and don't trade when you have historically taken the most losses. So look for situations where historically you've had more losses, and if you want to learn to work through that zone, then switch to sim trading. How do I stay out of the chop? It just depends. I mean, some chop I'll trade in, some chop like what we were just seeing right now on the market, we call that a widening up zone or a zone of pain. I don't trade in those zones. I'll just wait. And we might be in chop on a larger daily time frame, so then I drop down to smaller time frames, and I'm more aggressive with where I take my target. So if I've got things lining up on multiple time frames, then I'm more likely to just hold them on those larger time frames and be more aggressive. One thing you can do to help break emotional situations is set an alarm in another room that forces you to get up to turn it off. And a lot of us have things like Alexa now, we can just turn off the alarms. But if you set like a physical alarm in another room or something like that, that can be a way of just forcing you to do something that is not yet a habit. So think of ways where you can create new habits and you can break those old habits. So take breaks throughout the day, get up, make coffee, go read a chapter in your book, go for a run. When I lived in Florida, I would go over noon and I would go for a swim every day. I live in Arizona, and you would think I would be able to swim as much, but it's not quite the same. Meditate, exactly. Something that just pulls you away. I cook a lot during the trading day. So that also means that I can burn a lot, but that's another way to get away from it. And so, this is our growth set mindset. It's just repeating this over and over again. What to do. Start journaling, you guys. Find a mentor like myself. I've been working with traders for 25 years at least, often on a one-to-one basis, but I also run a room where I do live market analysis every single day. And we look at techniques for developing strategies. So not only do I teach you the most core strategies that I trade, but I also teach you the details that go into creating different patterns and strategies. And I don't have time to get into all of these here right now, but I do want to show you something that I want to offer you guys. And in the course of the next month, I have my online mentoring room open free for everybody. I don't set incredibly high prices for the things that I do because I learn by teaching. I have always learned by teaching. I never make money on the education that I do. I use the funds that I make from selling courses and things like that to pay my staff. That keeps the site running, that keeps me being able to teach, which keeps me being able to learn in a focused manner. And it's really what has kept me here. all of these years. And so let me go over and share that with you. These are just the building blocks. If you slow the replay down, you can see some of the building blocks that I use. And support and resistance, momentum, trend development, trend placement. This is our chart here from today where I was showing you that, we've got that consolidation going on just like before, where you can get that FOMO level, right? Where, hey, you missed the main breakdown there. And now before you know it, you're down here and you're like, well, it's already hit a measured move, but I think it's going to go lower, but I can't do as great of a setup, and you end up, even if it goes lower, you might end up just trading chop and doesn't end up being a great trade after all. That is a common issue with traders, or they'll short here, get out because they're nervous, and they'll see like previous levels of support, and then they miss out the bigger level. Then they're thinking, oh, I knew it would go further, and then they get here, but they miss the big chunk in the middle. And that's just a confidence thing. It's just building your confidence and having and understanding all these building blocks that we use. So for example, this is a chart from here going into today. This is a chart over there on the right that was from yesterday, where I was explaining how the market could play out coming into today, how we would struggle with the previous high, where we could pull through it a little bit, but then we would be more likely to go into more of a range because this pulled back 50%. It did so with stronger than average momentum, makes those previous highs very difficult to break, and yet the upside momentum over on the left was very strong. So I was just teaching traders what to expect based upon what we had seen and putting in all of those building blocks into play. So the course that I have available for you guys is a live course. It is $100 for a 3-hour seminar and an entire month in League of Traders. Well, you will learn more beginner and advanced stuff than you'll probably be able to comprehend in the course of a month. It's something where you're basically just diving into like a foreign exchange program in another country to learn another language. And I teach live every single day at noon, from noon to 1. A lot of times we have setups that are triggering during the day. We talk about, hey, where's the market most likely to go and why? That's the big question, why? It's always why. So if you want to join me here on March 4th, this is after our free month in League of Traders. And there's no obligation to continue, by the way. I'm not going to like rope you into like an ongoing subscription or something like that. You can cancel whenever you want and just enjoy that free month, watch the strategies unfold, learn them live, and then come and join me on the Saturday after the end of February for my favorite all-time reversal strategies, where we are looking at the trend exhaustion and the initial stages of a brand new trend, and recognizing when that is something that's most likely to go into a very strong impulse move versus something that's more likely to chop around. So how do you recognize when something is actually going to kick off a brand new trend versus something that's going to be stuck in that chop that TJ was asking about? How do we avoid that? Well, that's what this class is going to do. And it's going to give you my core template for the strategy checklist that you can go over as you're trading the strategy, as well as things to think about, pros and cons, and which ones are more important. And again, this is $100 for your entire month for the course, and you'll have access to me every single day to ask whatever trading questions you might have. So I am out of time here. I want to thank Rob and everyone for having me, and I hope that I'm giving you some tools that you can use to build your own confidence, whether it's just recognizing some of the triggers that are causing you to get stuck at different levels, and also just encouraging you to explore your own trading versus just mindlessly following a strategy or a system, somebody's system. Making it your own and building confidence in it is the most important thing for determining whether you're going to be successful at it or not.
Thank you so much, Toni.